Hello and welcome to part 2 of chapter 2. We are going to talk about analyzing the effects of business transactions. What do they do? What do the statements look like? So one of the very first things we're going to talk about is revenue. What is revenue? And I think we may have touched on this just a little bit at the last one, but I wanted to review it. Revenue is the inflow of business or inflow of money into the business. It is also called income. You'll hear it called income often. What is an expense? Outflow of cash, incurring of a liability. And income and expenses are reported on an income statement. That's a formal report that shows how much revenue they've had and how much expenses they have had. At the top of every financial statement we will prepare, there's a 3-line heading. One of them is the name of the business. The second one is the statement, and the third is the date. As you can see here, revenue, these are headings. Expenses, fees income is the revenue for Wells Consulting Services, and then it lists 2 expenses, salaries and utilities, and these are over here because we add them together. Only totals go over here in this right hand side. We also have to include total lines. Fortunately for you out in Connect, most of those total lines are there and you don't have to worry about them. At the bottom, it comes down to net income. How much money did the business make for the entire year? And when we are preparing financial statements, the income statement is always the first statement that we prepare when we are preparing financial statements for a business. Always, always, always. We have to prepare this statement first. The next statement we prepare is the statement of owner's equity. We start out with the capital balance at the beginning of the month. We add in net income. We take out withdrawals. What are withdrawals? Withdrawals are the money that businesses take out for personal use. We then take the net income, subtract out the draws, and that leaves us with our increase in our capital account. The very last number down here is our capital at the end of the month. So we take the beginning of the month, put the increase of our capital, and then we do ending capital. And this could be a decrease in capital. So for instance, if the business had lost money during the month, this would be a decrease in capital, not an increase. And here is our balance sheet. It shows our assets, our liabilities, and our owner's equity. As you can see here, here's a list of our assets. We list them in order of something called liquidity. Liquidity is how fast can you turn them into cash and run out of the country. So here, cash is the most liquid. Accounts receivable is the next most liquid. You could go to your customers and say, I want you to pay me right now. Your supplies, you could take that and go on the street corner and sell them. And then prepaid rent, you would have to get a hold of someone and ask for a refund and move out of the building, so that could take a little bit longer. And equipment, that could take quite a while to turn that equipment into cash. And over here is our liabilities. Accounts payable, how much we owe to our creditors. And then we have owner's equity. And we list just our ending capital account. So here are the 3 statements all together. And if you'll notice, they're all connected. So on this one, we take the net income from the income statement and we put it down here on the statement of owner's equity. And then we take ending capital account from here and put it down here on the Carolyn Wells Capital. So you must prepare these in order to be able to complete all of the financial statements. And now there's one of your homework problems that it has you start out with a statement of owner's equity, but I do believe it gives you the information to calculate the income statement in order to be able to complete the problem. So now I want to go over 2 problems that will help you with your homework and hopefully make things a little bit clearer for you. So I want to go over problem 2.1b, and that is on page 46. And if you'll turn in your workbook, you can follow along with me. Now let's look at problem 2.1b, again on page 46. And we're going to go through each of these transactions and look and see how they fit into the accounting equation. And then the next problem, we're going to take a worksheet that has been completed and we are going to make financial statements out of it. So number one, the owner invested $36,000 in cash to begin the business. So we're going to put $36,000 in our cash column. And let me see. And then over here in owner's capital, $36,000. Okay, and then number two, purchased equipment for $16,000 in cash. So our cash is going to go down and our equipment is going to go up. Next one, purchase $6,000 of additional equipment on credit. On credit means that we are going to pay them at some point in the future. So our equipment has to go up and our accounts payable has to go up. Next one, paid $3,000 in cash to a creditor. So that means our cash is going to go down by $3,000. And our accounts payable is going to go down by $3,000. Number five, the owners made an additional investment of $6,000 in cash. So they put even more money into the business. Our cash is going to go up by $6,000 and our owner's equity is going to go up by $6,000. Number six, perform services for $4,200 in cash. So our cash is going to go up by $4,200 and our capital is going to go up by $4,200. And it looks like I forgot up here to put in my plus sign. So I'm going to go back up to number 5 and put in my plus sign. So number 7, perform services for $3,650 on account. Meaning that they're going to pay us later, so no cash was involved. So even though it is on account, it still is over here in owner's capital. It still increases our revenue. 8, paid $2,600 for rent expense. We wrote a check for rent. And this is going to decrease our owner's equity. Decrease our equity overall. Number 9, receive $2,500 in cash from a credit client. So our cash is going to go up and our accounts receivable is going to go down. People do not owe us as much money anymore. Number 10, paid $3,150 in cash for office supplies. My cash is going to go down by $3,150. but my supplies are going to go up by $3,150. And 11, the owner withdrew $5,000 in cash for personal expenses. So my cash is going to go down. And my equity is going to go down because I took money out of the business. And now I'm going to go through and total these. Okay, so now we are going to move on to problem 2.2b. That is problem 2.2b. And I apologize, I misspoke. We are moving on to problem 2.4b. 2.4b, and that is located on page 47 in your textbook. And here they have a worksheet that's already completed, and the difference between the worksheet we just did and this one is that after every single transaction they have a balance. So the one we just completed did not have that, and here they have a balance after every single account. But that is the only difference. It's the same worksheet that we just completed. Now we are going to start an income statement. This problem asks us to create an income statement, a balance sheet, an income statement, a statement of owner's equity, and a balance sheet. And we're going to go ahead and go through that entire process. At the top of every statement, we put what type of we put the business name and the type of statement. And then we are going to have revenue. We always start with revenue. And then we're going to have some fee income. She's an attorney, and we're going to have some fee income. And now if you look down on this worksheet that is completed for us on page 47 and follow across the top, there's cash, accounts receivable, supplies, equipment, accounts payable, capital, revenue, and expenses. We are going to get our revenue number from that revenue column. We're going to go all the way to the bottom until we get to fee income. And then we're going to do expenses. And if you look, we have a column with expenses in it. But in order to find out what type of expenses they are, we have to look clear over to the left-hand side. So like second line from the top on the left-hand side, it says paid for utilities. And as you follow that all the way over to the expense column, it has an expense of $600. So we are going to have a utilities expense. And then we're going to have a salaries expense. And then we are going to have telephone expense. And all of these can be found in the chart that was already completed in the book. And for whatever reason, this is not wanting to do it. Sorry about that. And then as you can see, the last expense we are going to have on here is our telephone expense. And I'm just going straight down the list of expenses in the expense column. You'll notice here there's a total line under here. You'll have to put that in your workbook, and this signifies that all of these are being added together. So we are going to do total expenses. And our total expenses are $6,600, which leaves us with our net income of $4,200. So let's keep moving. Let's go on to our statement of owner's equity. Again, have to put in the name of the business, and we're doing a statement of owner's equity, and we are doing the month ended August 31st, 2013. And with this, we start out with the capital at the beginning of the month. So if you look at the chart and find L. Carter Capital Account, we are going to start with the beginning balance, not the end that's listed clear down at the bottom of the page. We are going to start out with the balance that's at the top. And in this case, that amount is $23,200. And we're still just looking at the chart on our book. Next, we do net income for August, and we are going to get that back right here right there. I'm going to highlight it off the net income that we just calculated in the previous statement. Next, we're going to do less withdrawals for August. You know what? I put this one in the wrong column, so we got to go back and correct that. This needs to go in this column right here. Draws. So if you go down the list in the capital account, it looks like it doesn't change until it gets to the very last transaction, and then it says withdrawals for personal expenses. That's draws. That has to be taken into account on this statement. And look, there's a total line because we're doing something with those. Now, because they made more money than they took out, we increase the capital. And we increase the capital by $3,000 because we made $4,200. We took out $1,200, so we were left with $3,000, and that leaves us with ending capital of $26,200. We take and we add the beginning capital to the amount that it increased during the month, and that leaves us with our ending capital account. And now I have to go to a different tab, but I believe you get to stay on the same page for the balance sheet. Let me make this bigger. Now let's prepare the balance sheet based on the information that's on this sheet. Linda Carter, attorney and counselor at law. We're preparing a balance sheet. And this doesn't say for the month end of, this is for one day. One day is what the balance sheet is on, not for the month ended. And over here, we're going to have some assets. And if you look across on our worksheet, there are 4 assets listed: cash, accounts receivable, supplies, and equipment. And we want these balances at the end of the month. And luckily, these are already listed in order of liquidity, so that is pretty easy. So we look at the ending balance at the very end of the month. At the very bottom of the column is our cash. Next is our accounts receivable. The ending balance is $6,600. Then supplies. Again, we're just looking at the chart and we're just pulling those ending balances off there. then equipment. And next we do total assets. And if you'll notice, there's a line right here and a double line right here. That is important to remember. And over here, I'm going to go and I'm going to list my liabilities. And our liabilities is accounts payable. It's the only one we have. And we're going to use the ending balance of accounts payable. So all the way at the very bottom of the column with the chart in your book. And then the last thing we have is owner's equity. That is it. That's all we have left. I'm going to go ahead and center this. And then we do Linda Carter Capital for $26,200. And where did I get that number? Well, I got it right back over here on the statement we just prepared for the statement of owner's equity that we just prepared. And on your sheet, it should be just above. On mine, it's on a tab back. So here, we got this number off the previous statement. And now the only thing we have left is total liabilities and owner's equity. And we total those up. And we put a total line right here, and we do a double line on the bottom. And look, our total assets equals our total liabilities and owner's equity because of the accounting equation. As always, if you have any questions, please feel free to email me or call me. I am more than willing to help in any way I can. Your homework is due this Wednesday by midnight. So at that point you will need to have your Chapter 2 homework turned in the Connect Accounting website by midnight. And good luck to you.